Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we have a lot to talk about, so let's get straight into it. We're looking at the results of Republic Financial Holdings Limited as well as that of NCB Financial Group. And we also touch a bit on the recently concluded tender offer for Guardian Holdings shares by NCB, as well as an update on Sagicor Financial Corporation and the proposed scheme of arrangement between Alinvest. So looking at Republic Financial's 6-month earnings, we can see that the company generated, or the group rather, generated earnings per share of just around $4.83, which, well, reported earnings per share, which was a very impressive 20.4% increase from the $4 recorded in the prior comparable period. Now, there were certain one-off adjustments, and after making some adjustments to the earnings results, core profits would have been up just around 6% on period, which was still quite a commendable performance. In terms of some of the line items, net interest income increased from $1.68 to $1.78 billion, and operating income overall was up 6% from 2.4 to just around 2.55 or 2.56 billion TT equivalent. Here we can see that there was a credit loss expense increase of around, well, almost doubling from 84.5 to $162 million, and that was attributable to some of the growth that the company would have experienced over the prior comparable periods. Now, looking at the trend in operating income, we see a nice gradual increase for Republic Financial Holdings Limited, growing in terms of net interest income from 1.5 billion odd in the first half of 2016 to its current 1.78 billion in the first half of its 2019 fiscal year. Other income has also experienced a fairly stable and upward trending growth, moving from 693 to just around $790 million. One of the most important developments, of course, for Republic includes its acquisition of Cayman National Corporation, and of course, in subsequent financial periods, we'll see the full effect of that acquisition in the group's financials. Now, at its current market price, Republic trades at a price-to-earnings ratio of 13.7 times, below the sector average of 16.6 times, and offers a trailing dividend yield of just around 3.6%, which is a tad below that 4% of the banking sector average. Having said that, Republic is well poised for growth through acquisition, and on that basis, Bourse maintains a buy rating on Republic. Turning quickly to NCB Financial, well, the group reported earnings per share of the TT equivalent 25.7 cents for its 6-month period ended March 2019, which is a 9.9% decline from the 28.5 cents recorded in the prior comparable period. Now, as with Republic Financial, there were some one-off events which impacted both periods from a reporting standpoint, and after making those adjustments, group earnings per share for the company would have fallen just around 4.9% overall. Looking at the profit before tax trends for NCB, we can see there was a nice upward trend with a significant jump here related to certain one-off items, including goodwill and sale of associates. However, in the half year, there was a moderate decline of around 6.8% in terms of profits before taxes. Now, looking forward, more importantly, the group would have recently concluded its offer for a majority holding, or up to 62%, in Guardian Holdings Limited. Now, that offer would have closed last week, Friday, or on May the 3rd, and the preliminary results suggest that there was an oversubscription, well, quite a significant oversubscription, with around 118.5 million shares being tendered in comparison to the 74.2 odd million shares being sought. Now, that means for investors who would have tendered their shares that on average, and again barring no significant changes to the legitimate number of shares tendered, every 62.6 or 626 of 1,000 shares tendered would be receiving that $2, so the $2.79 per share US that was on offer. So on the basis of a relatively calm operating period, but again, with prospects of growth through acquisition increasing, the forward earnings generation of Guardian, Bourse maintains its neutral rating on NCBFG. So finally, we want to talk about, or briefly update everyone on the Sagicor acquisition, or rather the proposed scheme of arrangement. And last week, we have mentioned that there was no date set as yet by Sagicor for the special meeting on which there would be a vote for or against the proposed acquisition by Alinvest Corporation. Now, that date has since been set. Last week, the date was set to the 4th of June. And the deadline for submission of proxies, that is if you're not going to attend the meeting in person, is now the 31st of May. The terms otherwise have not changed in any sort or form or fashion. So investors should contact their brokers to find out what's the best way to approach placing their proxy form votes for or against the deal, as well as their consideration election forms, which really means what you would like to receive for your exchange of Sagicor shares, whether it be cash, shares, or both, as you are eligible. That's it for this week's Bourse Report. Have yourselves a wonderful week. For more information, contact us at 226-8773 or 2-BOURSE. Email us at invest@boursefinancial.com or check out our website at bourse.investment.com. Have yourselves a great week. This has been the Bourse Report.